Good morning, everyone. Welcome back to the Schwab YouTube coaching channel for the Wednesday edition of Trader Talk in today's market. I am your host, Kevin Horner. It's still dry and sunny here in Denver, Colorado, but today, pleased to be joined by my friend and fellow coach, Brent Morris. Good morning, Brent. Always good to see you on a Wednesday. How are things?
Hey, good to be back. We missed you last week, Kev. I know you were recovering. Hopefully your body's fully functional now. Your elbow works there. Great.
Yes.
And so glad to have you back because it's always better with two people.
I could not agree more. I don't mind. I love hosting the solo session of this class on Thursdays, but always good to have a conversation, a little bit of back and forth. We also are joined this morning by Barb Armstrong there in the chat, everyone. Say hey to Barb. Of course, Barb will answer questions, comments that Brent and I are unable to get to, but as usual, we'll both keep a close eye on what y'all have to say in the chat there. We'll try to involve those comments, those questions in our discussion, so please feel free to post there for the session. Don't forget, you can follow the three of us on X. Each of us coaches are available there. It's probably the best way for you to ask questions and engage with us coaches, so you can follow us there. Barb Armstrong, CS, Brent Morris, CS, and Kevin Horner, CS. With that, let's make sure that we also, of course, remind you to make sure you're subscribed to the YouTube channel here so you're getting all our updates. Let's jump to our disclosures and we can get into the charts with you all. Please remember that our conversation here is exclusively informational and educational. We do not make recommendations. We do not make endorsements for an approach to trading the market. We do, however, discuss technical analysis in this class. And as we do that, we really just try to offer you the insights and concepts of technical analysis that traders might choose to use and employ in their own processes in trading. These are not suggestions. These are suggestions of things to consider, but by no means a recommendation. Additionally, as it goes with technical analysis, we do not encourage you to make your decisions on technical analysis exclusively on that alone. Additionally, it can be said that we don't encourage you to make any decision on one thing alone. Of course, the market is a very big puzzle, and utilizing multiple data points can be very helpful for traders. And if this is a new class for you, our agenda, whoops, excuse me here, got the wrong thing there. I was going to tell you our agenda is pretty basic, but what it is a top-down review of the market, everybody. What we go for is a start with our broader indices, and then we work our way through. So we'll see the S&P as we've got here. We're going to look at the NASDAQ 100, the Russell 2000, and the semiconductors along with our sectors on the move today. So with that in mind, taking a look at the SPX here, Brent, we did have a weak open. They bought it up yesterday. We have a little tail there. Looks like a potential test of some horizontal support in the neighborhood of about 65.50 on the SPX here, but a couple of days below the 50-day, starting to get maybe some traders, shorter-term traders, a little uncomfy here.
Yeah, no doubt. I mean, certainly you see that in the SPX. You hear that in the comments about, hey, the market has been showing some weakness.
Yep.
I wouldn't say we're in a downward trend, but we broke that 50-day and we said that was kind of a key level. We do have another key level about where we're at. You can see our RSI has been weakening, which is just another, that's kind of goes along with what we've got a lower low on the RSI. That's just another sign of mini. Now, things can change, but, the SPX is driven by, some smaller, not smaller stocks, but by a smaller number of stocks really kind of drives it. And we've had kind of a tech sell-off, an AI, people are calling this kind of an AI sell-off. And it certainly does affect the overall market. And so, that's what we're definitely seeing some weakness, but we do have a key support level there on that.
Well, one thing you said there was trying to remind viewers that each of these indices have leadership, right? There are cap-weighted approach, right? So what we know is that the largest companies in these spaces drive the movements in these individual indices. A good way to check that out, obviously, is via the Market Watch tab and maybe the heat map here, where we can quickly see some of our bigger movers, of course. Your bigger positions are over here on the left. The size of the box matters here, everyone, not just the color. So yes, Alphabet the two versions of Alphabet, the GOOG and GOOGLs. Both look green today, as does NVIDIA, but you can see those are two substantial positions within the S&P 500 as, 501 positions, Brent, but clearly leadership is going to come from these largest of the companies within the index.
Yeah, so in the S&P 500, NVIDIA represents 7.4% of the index. So there's 500 stocks there, and if you were just to divvy them up equally, each one would be 100% divided by 500 would be 0.2% of the index. And NVIDIA is 7.4% of the S&P 500. Now it's even more of the NASDAQ, Kevin. It's 13.7% of the NASDAQ.
Goodness.
Now, let's go one step further on that. What about the Dow? How much of the Dow is NVIDIA? Now, NVIDIA is, now you look, and this is a little bit deceptive in a sense, in that NVIDIA market cap wise is a huge part of the Dow, but in terms of the weighting, only 2.4% of the Dow. In other words, the Dow has 30 stocks in it. So each stock, if it were just averaged out, would be 3 1/3% of the Dow. NVIDIA has less than that. Why? The Dow is a a price weighted index. And so other companies that have more expensive stocks represent a larger percentage of the Dow. For example, Goldman Sachs. Where's Goldman on there? Goldman's kind of in the bottom right portion of the page there. And you can see it's kind of a pretty small box in terms of market cap weighting, but because Goldman is a more expensive stock, it is, I have the number right here, it's over 10%. I don't know how recent this data is, so these numbers probably aren't exact. The latest number isn't exact on gold. It's 10%. It's 3 times as much of the weighting on the Dow as NVIDIA is, just because of the price weighting. That's one reason why a lot of traders and investors the Dow has fallen maybe a little bit out of favor, just because a lot of traders prefer the price weighting to, the market cap weighting to the price weighting of the index. But going back to the broader point here, Kev, NVIDIA, for those market cap weighted indexes such as the S&P 500 and the NASDAQ, it is a big driver there. And other chip stocks and other tech stocks. And so this sell-off is a large part tech-driven right now, tech-led, we'll say.
And further, clearly, we're going to have an impact event afternoon today with NVIDIA reporting after the bell tonight, and it's going to have a major impact on not just NVIDIA, not just technology stocks, but obviously these 2 and 3 major indices, right? It's going to impact the Dow, it's going to impact the S&P, and it's going to impact the NASDAQ. So this is why today's afternoon report is such a big deal, Brent.
It is a big deal. You're absolutely right. It's possibly the biggest earnings of the whole season. And just because it's the largest company out there, there's not many companies that really move the whole market per se so much. NVIDIA is one of those few. Other than that, when I look at earnings season, I kind of look at the accumulation of all the companies' earnings. The general, is earnings season a good season or bad season? But there's a few companies out there, NVIDIA being one of them, that in it of itself can kind of move the market fairly well.
Absolutely true. Yeah, absolutely. And as a reminder, everyone, when we're looking at something like the S&P 500 and that cap weighted viewpoint, if you want to get a visual of a little bit more balanced view of the trend, this again, leadership with your largest companies. If we want to see equal weight, we can just add EW. So now we have the equal weight index. And Brent, it really does look a little similar in the sense that we've pulled back here, but we've really been under consolidation in this space for a while. So when you think about something like the stocks over their 200-day moving averages, they're probably pulling back a little bit. I'm sure we've seen fewer stocks in the S&P over their 200-day at this point, and probably fewer stock over their 50-day moving averages as well. But this is kind of a reminder of a way that you can get a maybe a more balanced view of the S&P as opposed to the simple SPX chart.
Yeah, no doubt. Right now, just to your point, 51% of stocks are above their 200-day moving average in the S&P 500, and 35% of stocks are above their 50-day in that S&P 500 right now.
And both of those are obviously lower numbers, largely due to the middle of the pullback we've been witnessing. So, as is often the case, Brent, if you're a short-term trader, I'm sure many are watching just yesterday's candle in the S&P, and we're going to see the same thing in the NASDAQ here in just a quick second. But a big rangy day, meaning in order to know directionality, we have a support level beneath us, but it's very important to know, are we going to be capable of taking out the low of today, trading below that, creating a new short-term low would be fairly bearish, or do we start to trade through the high of yesterday, which could be significant as well? If we can get above the high of yesterday, defining yesterday's action as the low day in this pullback, well, then we could be in the midst of witnessing a market that's getting back on trend.
Yeah, and even if so the market just opened, I don't know how many, 10 minutes ago or whatever, but right now it's kind of a Harami type candle, and which is somewhat positive in the sense that the bleeding has maybe stopped a little bit temporarily, and this is just a short-term indication there, but that could be perceived as positive. But obviously we have a lot of trading left in the day. And ideally, you get the close above the high of the low day that could hold there, Kevin.
Yep, that would be what bulls clearly want to see. Great to move through it intraday, better to move through it at a closing basis here. Now, same thing on the NASDAQ, Brent. You're seeing a nice little green candle, so we know we're up from the open. But as you called out, a Harami, we are fully engulfed within the action of yesterday to this point. We'll see how that plays out. But ultimately, Brent, this is the same. And that's one of the things we've been noting for a while, dating all the way back to late April, when we got above the 50-day moving average eventually, or early May, as it were. We've seen a lot of this, right? Pullbacks to the 50 have been bought up in both the S&P and the NASDAQ. Both of them made that matching low here over the last 2 days, both trying to trade through yesterday's high to get back on trend.
Yes, and as we mentioned before, the NVIDIA earnings are likely to affect, of the major indices, the NASDAQ the most.
I would agree. Maybe, well, the majors, yes, and then of course something like the SOX index as well, of course. But that's not that's an index of an industry group rather than a massive index like the NASDAQ 100. Only looking at the biggest of the 100 NASDAQ stocks. So there again, lots of consistency. In terms of trade management, many traders utilizing the 20 and the 50 balance their position sizing against those moves. So breaks below the 20-day for some traders give you reasoning to reduce position size, build cash. Breaks below the 50-day give traders even more reason to potentially build cash and take money out of their large position or long positions. Because again, not that they know that something different, or not something is coming, but rather something's different than what had been working. And when traders are seeing something different, they tend to take action. So having a plan that allows you to say, all right, odds are increasing for maybe a deeper pullback by virtue of the fact that we're below moving averages. We haven't been below for more than a half a day here and there. The increase to the odds in that way give traders reasons to pull cash and to take profits and build that cash position. So those are the thoughts that I'm sure many trader is thinking about here this morning. Now, Brent, as we move off of the biggest of the positions, the S&P, the NASDAQ 100, let's look at the small caps here. Russell actually had a decent day yesterday. The candle here turned green because we finished up versus our open yesterday. And yet we don't have, we're not having quite the day we want to see out of the Russell just yet. We really want to see that getting back into gear here. But Brent, one key thing that I'm noting is this break of the 20 below the 50 here suddenly. So our real short-term viewpoint might be telling us that things are a little more choppy, perhaps.
Yeah, agreed. I mean, the Russell has been more volatile, and it's over the past month, it's been down about 4%. It's been down more than the large cap indices, and we'll see. I mean, it was getting kind of, I think, a tailwind with interest rates lowering, but lately we've seen interest rates have kind of stalled out, went up a little bit and just have been kind of flatline around 4.1 on the 10-year at least. And so it's, if we were to see the 10-year lower more, we'd probably see some more benefit to the rut. And also, I think just kind of, there's more maybe concern of economic slowdown, and that is going to impact the small caps more. Small caps are just more sensitive in that regard.
It's true. And Brent, I'm going to lift my oval here, which is basically highlighting the action of the last 3 weeks. The reason I'm lifting it is so you can see the back and forth. Look at, we've basically now for 3 weeks just been mired here in a very tight range. The thing that stands out to me is that 20-day crossing the 50 now to the upside. So what we seem to have is a potentially shifting dynamic to the downtrend in yields. And this is worrisome as it relates to the Russell, and I'm sure is providing some of these headwinds that the Russell is under here for the last 6 weeks. We've consolidated a little bit, but the trend didn't continue to the upside, and now we've been in pullback mode. So do you agree that what we've seen out of the yields here, it's a positioning that if you're bullish on yields, this is kind of the action you want to see. But as it relates to the Russell and maybe a large swath of the rest of the market, not ideal.
It's not ideal, and it's not, it could be worse. We've basically, where we were at, back in September right now on this. And so we're just not making any progress on this. And part of it is, the economics will tell us. And we've had kind of a dearth of economic information of late because of the government shutdown that kind of cut some of it. And, we'll see that right now there's a lot of uncertainty about, say, the Fed. If you look at we have another meeting. By the way, we have Fed minutes today. That there's not going to be an announcement of a decision or anything, but that can be insightful. But right now, if you look at the CME Fed Watch tool for the next rate decision, which is in about 3 weeks, it's basically 50-50, coin flip almost, according to the markets there in terms of whether we're cutting or not. And so there's just a lot of uncertainty, and I think the yields are reflecting that right now.
I think so too. And Jay asks a pretty good question in here about the visual of this. Can we look at this as a potential inverted head and shoulders? I would say yes, because you've got right shoulder here. Let's take this line, duplicate it. We'll add it over here to the left shoulder, and then just a nice little round head here. There you go. So yeah, it would look like that. And in fact, if I was gonna take that theory a little deeper for you, Jay, I'm gonna lift these other ones. And yes, there's a good band of resistance there at that 4.2 that I just eliminated, but the neckline of such a pattern, Brent, probably is a sloped or slanted neckline like so. Meaning if we trade above this, then traders start to get decidedly a bit more bullish on yields. And the expectation may very well be for a pop into that 4.275. A 75 basis point move there would be pretty substantial. And again, headwinds on these sensitive areas of the market.
That would be a true trend change to get there. And right now, I wouldn't say that's the case. I'd say we've kind of petered out in terms of the downtrend maybe, but it hasn't really gone into a full-on uptrend. Now, that head and shoulders pattern, what you drew, it's a resistance level we're talking about, right? And so that's what these patterns turn out to be. It doesn't matter whether we're talking head and shoulders or double tops or cup and handles or whatever. those are support levels, resistance levels, and that's what we're looking at. So we'll see on that. And sometimes people go, well, is it kind of weird using technical analysis on a yield chart? People don't trade
Sure.
yields. But keep in mind, the yield is just the inverse of the price of the 10-year note. And
Right.
so this would just, instead of being an inverse Head and Shoulders, this would be just like a kind of a traditional Head and Shoulders on a price chart on the 10-year.
So Brent, let's take this just a one step further. Okay. And we try to do this every class. We try to remind ourselves of the relationships between these groups, sectors, industries, etc. So we know, after having looked at the Russell, that the Russell's been under pressure as yields have climbed. If we see, and again, this is the key takeaway as it relates to technical analysis. Technical analysis doesn't tell you what's going to happen. It just says, it allows a trader to say, if this happens, then I'm going to do this. Because the odds for yield to climb to that 475 increase dramatically if the yields climb through my downtrending white line here. So that increase of odds tells traders, okay, now I need to take that into play if we see yields trading above 415, for example. If that happens, then traders may expect the Russell to remain under pressure. What other areas of the market, Brent, can we lean into and say, okay, that tells us something now. Yields are climbing. Where do we get pressure or where do we get benefit?
Right. So there's industry groups out there, sectors that are more like yield sensitive. For example, utilities is one that comes to mind. Utilities is a sector where they tend to do worse if yields are higher. And there's a couple of reasons for that. One is it seems to be a fairly highly debt leveraged sector. And so they rely, and higher yields mean borrowing costs are higher. And also it's a sector that people go to because of the yield, basically of the dividend yield, I guess, in the sector often.
Right.
And if the competitive yield out there is higher, it makes this relatively less desirable there. So that's certainly one. And of course, you can think about things like real estate out there and mortgages and whatnot. And there's usually a decent correlation between real estate, the 10-year and mortgage rates. It's not perfect. And, obviously they're off by numbers, but just in terms of general directions, there is a correlation there. And so those are kind of the two that come first and foremost to mind there. But as you said, Kevin, it's not just sectors, it's just like smaller caps, smaller companies, less capitalized companies, which are more reliant typically on debt, more sensitive to the economy, tend to be more sensitive.
So the takeaway, I hope, is tell the story, right? The narrative gives us, or the understanding of these maneuvers in important areas can help us to understand where we might go for our next opportunity for a trade. If yields continue to climb, Russell continues to be under pressure, what area of the Russell might hold up okay? Maybe it's financials that would benefit a little bit from a rising rate environment, Brent. And the Russell has a pretty high component of financials, especially compared to the NASDAQ 100 or the S&P 500. So reminder that there's a big chunk of that in the Russell. And so while you might not want to be, why some traders might look at it and say, well, if I'm worried about yields rising and I don't want to be in small caps broadly, I could consider small caps that are in those banking spaces that might be outperforming in that window. So there's always a balance to this, Brent. There's a bull market somewhere 100% of the time. There's a bear market somewhere 100% of the time. I think it's really helpful. I hope it's helpful for both traders and investors alike to give consideration to these things as you're watching the market day to day, or maybe some of you are watching it less frequently, maybe just week to week, and picturing things on a weekly basis in lieu of daily. I know that daily is not ideal for all of us here. So go ahead, Brent.
Let me just add one more thing, because you mentioned financials. Financials could benefit. One thing, especially like with banks, that would benefit with one reason they would benefit from rising yields is if the larger the yield curve is, the steeper the yield curve is, the more financials would tend to benefit. In theory, if we see the 10-year rising, but if at the same time the Fed is holding shorter term rates lower, or perhaps even diminishing, that would tend to benefit financial companies here. Right now, we have a nice positive yield curve. That can be good. If it gets steeper, that would tend to benefit banks because they tend to loan out at a longer term excuse me, they tend to benefit from the spread, put it that way.
Right.
And sorry, I got a little distracted. Financial companies, not just banks, insurance companies as well, tend to benefit from the steeper yield curve. And that's what you brought up on the chart here, Kevin. This is a 10-year and a 2-year. And we're just looking at yields here. These are futures, but we're not trading futures here. That's been the general trend of that yield curve, and probably not, uncoincidentally, companies have been benefited from that. The market has benefited during this period of the rising yield curves.
Yeah, I think as I was looking at the financials a second ago, we've been in basically the yield curve has just been going sideways, right?
Yes.
As we've been working through things. Yield curve going sideways, notable. Financials in that window while going sideways, also going sideways.
Yes.
So yield curve, this chart, generally speaking, looks quite similar to that of the yield curve. Financials rallied as the yield curve was in the midst of rallying as well. And now that the yield curve is consolidated, we've seen financials consolidate a little bit, sitting at an area of support. So do we get that break to the upside in yields? Does it coincide with the financial sector sitting at an area of support, which can give traders reasons for exposure to financials even further, Brent? So I just feel like sometimes we lose the forest for the trees in these conversations. Sometimes we get a little too granular in our viewpoint because we're here every day doing this type of thing. I just felt it was important to address some of those relationships here. I'm sure, Brent, there's some other areas of the market that you've been keeping a close eye on. I want to hit the semis, but before we do that, is there anything else maybe in the sectors that has caught your eye here either today or the last few days of this week?
Well, I guess, moving to communications is up today. That'd be one to maybe look at. It's certainly, I think, the market leader right now in the market here, but that's Alphabet is driving that right now. Alphabet's up significantly today. And, communications is one of if you think about the sectors that are the biggest representation in these market cap weighted indexes, IT is number one on the list typically. Communications is number 2 on the list. It's a big chunk of that list there because you have companies like Google in there, Alphabet in there, Meta in there as well. But since Google is a nice big green, you see that there on there.
Look at that. Nice big green if you're ever wondering again about the size as it relates to an individual sector, I've just positioned simply communications, and you can see that this is essentially a sector that moves on what Alphabet, what Meta, and what Netflix do. If something else is moving, cool. But if those three are moving, any of those three are moving, that's where you're getting driver of the communication space pretty clearly here. So there's another good question that I thought we could just quickly attempt to answer, and it's on the yield again in relation to what happens if the Fed does in fact cut. Well, Brent, I would typically think that if the Fed cuts, we'd see yields drop, but that hasn't always been the case. Last time, one of these recent histories, we've seen the Fed cut at a level way back here, and it led to a massive move to the upside. Yes. And I'll tell you what, trying to figure exactly what the market's going to do sometimes is a fool's errand.
It's very difficult to know. The Fed controls that short-term rate. It does not directly control the longer-term rate. And there's a lot of factors in there. And, really what drives the longer-term rate, I would say, are kind of two main things. Perceived future economic strength and inflation projections really drive the longer end of the curve there. And because that's what drives whether people are having interest in buying or selling treasuries there at that point. So it's tough. It can be tough.
It can. I mean, the market's not easy. We're not here to tell you the market's easy, that's for sure. But we hope to be here to kind of help to mystify some of it. There's your look at the semis, Brent. A good, interesting spot for a bounce, a day below the 50-day yesterday. Today, already trading through the high of yesterday and into and through the 50-day. I'm sure that there are some bulls out here wondering if this is the level that they can balance on any new positions.
Yeah, but remember, I don't even know what percentage the NVIDIA is of the SOX. We were talking earlier about it, it was kind of increasing and it was 13% of the NASDAQ. Well, the SOX, it's probably a third or something. I don't know what it is, but it's got to be huge. So I guess that's my lead up to saying, whatever the technical analysis is saying in terms of support or resistance or trend or whatever, if there's one time it's going to change, it's usually at earnings. So I don't know what's going to happen, but I would expect that we'd see the SOX move. I don't know, NVIDIA may not move overnight or anything, but I'd expect that you'd probably have a good chance of a pretty big candle on the SOX tomorrow.
It's certainly there, right? I mean, as it relates to NVIDIA specifically, according to the trade, we always like to look at the straddle or the market maker move for the week. We can easily do it without doing a whole lot. Just peek over here. Expectation for about a $13 move plus or minus. So that gives you what, 174 right now up to 200. So 13 points either way. Is the way to look at it. That doesn't mean that's what's going to happen, obviously. We've seen implied volatility high like this and then it be a nothing burger on the report. That happens too, where all the volatility gets sucked out immediately. Yeah. That can also be the case. But this is how implied volatility is impacting the price of options at this moment. I saw a comment that I have to touch on, and it's, pause. I totally understand where you're coming from. The market hates you. It feels like that sometimes. I've been there. It happens. The market is not a kind animal, especially if we're out here chasing moves that may have already happened. And I got to say, the one thing that a trader benefits most from is preparation. And when I say preparation, what I mean, for me at least, is what I call chart triage, Brent. And that's just basically maintaining my watch list and going through it, not just once a day, not twice a day, all day. I work through it. I think about it. I watch the levels. I see the way price action occurs at the levels of import for me in my time frames. And then I make my decisions based on that. I add those to my Rolodex of information, and that helps me make my decisions. And I think for a lot of traders, there is no substitute for just looking at your charts, knowing the levels where you want to take action and the levels that will likely impact the price action subsequently. It's very, very important. I just can't get away from the idea, Brent, that you got to look at the charts and you got to know the price levels that matter.
Yep. Good. No, I don't think I have anything to add to that, Kevin, because you said it so well. Wanted to address in the chat, Wild Goose says, where do I go to see the tickers associated with each sector? There's a couple different ways to do it. One, I think, pretty easy way is just to go to the Market Watch tab and go to the Visualize. Yeah. And you can just kind of pull up the sector. You just click, here's the S&P 500, but you can narrow down. You see the list under S&P 500 on the left that Kevin has. If you click on consumer discretionary, boom, there's your stocks there. Now you can also go, if you don't, and you can go to the subsectors and whatnot as well. That's one easy way to do it, and you can kind of see how big they are there. You can also go to just in the left and column your watch list and view a watch list by industry there. as well and break it down from that standpoint.
Yeah, you've got sector indices, the sectors and industry groups. So of course the sector indices is going to give you just the 11 sectors of the market. Those are the 11 that I maintain over on my watch list there: financials, tech, communications, etc. But when you add in the industry groups, that's when it's going to give you the much deeper view of everything available there. And that's one of the things that I'll highlight here periodically on the quote page, right? Looking for relative strength and outperformance and so on and so forth. And so
that's a good answer to Nathan in the chat, because we're addressing a lot of chat questions today. But it says, hey, I want to know where, I want to look at sectors and see where they're going. Well, it's no guarantee of where it's going to continue to go. But like, for example, you have a relative strength 5-day on your watch list here right now. And so one approach that a lot of traders will do is they'll say, hey, look, I can see the sectors, I can see over historical time periods how well they've performed. And I want to see the ones that are kind of starting to strengthen maybe right now. And you can kind of look that way and see what have you been done for me lately, so to speak. Now that doesn't, that can certainly change, but that's the common approach that I see, a very common approach that people use in the market. It's kind of a relative strength approach. There's other approaches to the market. I mean, some people like to do the exact opposite. That's what we call a contrarian approach, I guess. But that's kind of the approach that people take on that.
Yep. And I like Nathan's comment there, just, skating where the puck is going. First of all, I love any analogy that brings hockey into the mix. That's wonderful. But I like this idea. Again, it's understanding where important levels are in any individual group or stock, and then recognizing when we move through that important level that there's an opportunity from that movement. Take that with you. Again, another one. If I can get a Naked Gun reference, the real Enrico Palazzo. Yeah, great stuff. Replace dead scrolling with market books and charts. I love this idea because I'm guilty as anyone of just kind of, doom scrolling the screen far too frequently. So falling back on my Thinkorswim mobile application, which I often do while I'm sitting on the couch, maybe checking out a Nugget game or a hockey game of the Avs, I will absolutely be scrolling through a number of watch lists. That's a far better approach. I love it. So I'm glad you mentioned that as well. I think that's a really good point. Now, one other thing was a question in here about I saw something about that trend. Okay, Nathan's question. The other answer to that question is check out anything James Boyd offers you here on the YouTube channel, because Brent, James talks so much about utilizing trend and the stages of a trend through the use of the Hull moving averages. It's really a process that he has been speaking about for a very long time. And I know a lot of our viewers have benefited from learning his concepts there.
Absolutely. So trend is key, and changes of trends are things that people look at, traders look at to try and guess where that puck is going, so to speak.
That's exactly right. Okay, Brent here. Let's finish it up with some stocks in the news. We've got about 7 minutes left. We had some upgrades and downgrades today, and I wanted to look at a couple of them. One of them is an upgrade on Medtronic in healthcare, of course, and healthcare is a space that has been rocking. First of all, let's do that. Let me just show the healthcare chart. Building a bull flag as we speak. Brent, I'm just going to pat myself on the shoulder a little bit because I've been talking about healthcare and change to healthcare all the way back to this rectangle when we had a gap move and then held the 50-day here. This was very important for healthcare back in August and September, and it's just been going like gangbusters here since. So a good move in the space. Medtronic got the upgrade today, and it comes from Goldman to neutral from sell with a new target that was up dramatically. Their former target was 81. They moved it all the way to 111 following the earnings on an overnight basis.
Yeah, well, I mean, it is interesting. We had earnings, nice jump up on earnings, but a lot of people seem to anticipate a good earnings, I guess, and looking at the reaction over the last week before earnings there. But yeah, Medtronic's been really strong. What the bottom of the gap or the top of the gap there could
Yep.
now possibly be, it's a support level for it. And so we'll see. Although today we've opened up, we've held some strength there, and then on the 5-year, you can see the long-term trend, a change in long-term trend. We're now in an upward longer-term trend on that.
I saw a question before we got going, Brent, asking for discussion topics that might lead more for investors rather than traders. And when I think about a move like this chart, I think this might lean more toward an investor viewpoint, because what you've had here is a significant drawdown from peaks achieved in the summer of 21, moving down dramatically. In fact, if I drew the line for a mathematical calc, we're going to see it sold down 49.5%. But since that sell-off, I mean, it was languishing for so long. This is what a bottoming pattern looks like, Brent. And when you get out of a bottoming pattern, what commonly happens? You start to trend thereafter. So that's what we're in the midst of witnessing. And you could, if I were to drill into this a little bit, you'll notice that the last 3 weeks are these 3 big, beautiful candles to the upside, moving to new short-term highs. So pretty intriguing look at a longer range chart in a stock that has now been upgraded to at least neutral, granted, not a buy, but the move off of major bottoms, moving through an area of former resistance, now potential support. Pretty intriguing look at Medtronic today. And I should also remind us all, I put out that 111 price target that Goldman did. Remember that is not a guarantee in any way to be achieved. Okay, we had a downgrade on Home Depot. So let's pull up HD in the chart. Unfortunately, Home Depot, this downgrade's not helping anybody now, Brent. The stock was at 420, 425 back in September. We're at 333. So they got downgraded at KGI Securities to neutral from outperform. They put a target at 320. That's essentially the 52-week low down here somewhere, right? Pretty close to it. Again, that downgrade, hey, thanks. But how about 2 months ago? That would have been
exactly helpful. That means it wasn't downgraded back, when it was up at above $400, and then only now is it downgraded. Hey, look, it's a tough game that people play here, and so I don't want to pick on them too much on that one, but it just it just kind of shows. It's maybe not helpful, although in the short term, sometimes it can affect the stock. I don't know if the downgrade's affecting it at this point, because really it was earnings that seemed to be the big driver on that. Yeah, the low that we had back in April would be potential support level there. Right now, if you're looking at the candle on that, that's not a strong candle intraday either. We're aware of the drop that we've had, but kind of that engulfing candle, which is not good intraday on that. So we'll see if by the end of the day we can turn that around and pick up some support. But as of right now, we haven't found the support.
Yeah, 2 points I want to offer. Number one, in the midst of a sell-off, you've probably heard the cliche, you don't try to catch a falling knife. When a stock is falling dramatically, many traders will position themselves to take advantage of a contrarian bounce, a bounce that is in the midst of going the opposite direction of the true trend, which is negative or bearish right now. But the first thing you got to do as a trader is you got to let the selling run its course. And what that means is it has to stop. You got to see that the selling has ceased and there's a floor put in. I liken it often to driving along the highway at 75 miles an hour. If you realize you missed your stop, you don't slam it into reverse immediately from 75. You come to a complete stop and you might back up, but you come to a complete stop first, okay? Otherwise, you end up with your transmission on the pavement. We don't like that idea.
Right.
So key component there. The other one I want to mention, Brent, is the idea that if you start seeing negative narrative detail like downgrades and so forth, but the stock starts to act bullishly on that, well, that becomes a heads up as well, doesn't it?
It does, because it tells the investor that the negative news has been largely priced in at this point. And that works in reverse, by the way. If
Sure.
if company is getting the good news and its stock just isn't reacting positively, it tells the market that, well, people have already kind of priced in the good news in that regard. So now there's always new news to come out that can surprise people, but that's we'll see on that. And by the way, one more comment on Home Depot. Nice expensive stock, 335. Home Depot, since we've talked about it today, 4.5% of the Dow weighting, roughly, at least. So this is a company that impacts the Dow significantly just because of that high price.
Another good point as usual, Brent. Gosh, this is exactly why I enjoy having this show with you on Wednesdays. Thanks again for doing it for us. Big thanks to Barb in the chat today. Lots of great discussion in the chat and a lot of back and forth. Really enjoy hearing from all of you. Hopefully we got to a number of your key and important questions today. For those of you interested, up next, we are going to be hearing from Ben Watson. That's coming up here a little later at 11 a.m. Eastern. So keep that one on your list for the day. And obviously, we're here every day, 9:30 a.m. till about 5 p.m. Eastern. So don't forget to make sure you're subscribed to the channel. Follow the three of us on X. We always appreciate that. And we'll wrap it there. Have a fantastic rest of your Wednesday, everybody. We look forward to catching up with you all again real soon.